All right, so welcome back, everybody. It's beautiful having us back. Before we went for the short break, we were talking about how that in every move, or how that in every market or in every trend, all right, there are impulses and corrections, or um, impulse and retracement. All right, so this is an overall bullish trend. All right, it's an overall bullish trend, but we are having we're also having bearish retracement in the midst of an overall bullish trend. All right, we're having bearish retracement in the midst of an overall bullish trend, and that begins to tell you that begins to confirm to you what I taught you the other time about market structure. All right, let me explain this to you in simpler terms. All right, just imagine you're the kind of person that doesn't like dogs. All right, or don't let me say dogs. Imagine you're being chased by a lion. All right, just imagine you're being chased by a lion. At that point where you're being chased by a lion, all right, all your nerves, every single fiber in your body is working towards just one thing, getting you to safety. All right, it's just working. The only concern or the major concern in your mind by that time is safety. All right. So picture it that as you're being chased by that lion, all right, you fortunately see a fence. All right. You fortunately see a very tall fence that you know, all right, your unconscious mind knows that if you're able to get over that wall, if you're able to cross that wall, all right, you are in a safe zone. If you're able to cross that wall, you would have escaped the lion. All right. At that point in time, your nerves, your muscles, every organ in your body will be trying their best to get you to cross over that wall. All right. And that's where the adrenaline hormones come in. All right. The fright, flight, and fear hormone. All right. It helps you to be able to do things that you'd never believed you could. But I'm not here to talk about adrenaline. I'm still going to relate it to the market. So the same way, all right, after you jump over that fence, all right, after you jump over that wall, it's impossible that immediately you jump over that wall, you continue running at the same pace. All right, it's impossible for you to continue running at that same pace all the way till you get home. All right, and the reason is this: immediately after you are able to cross over uh, that wall, all right, immediately you're able to cross over that wall, and your conscious mind recognizes the fact that you are in a safe zone now. All right, immediately it comes to that point where your conscious mind recognizes that you are in a safe zone. All right, all of the energies that were dispensed or that was disbursed to get you over that wall will suddenly be retracted. All right, and at that point, you would need to pause and catch a breath. All right, you would need to pause and catch a breath. All right, and at that point, what is happening is that you just had an impulse. All right, and at the point where you are resting, you are having a retracement. All right, because you're not going to sleep there. You still have to get back home. All right, but at that point, you're going to take a short break to just catch your breath. All right, and that's exactly what happens in a trend. All right, so if you understood that analogy, if you understood that illustration, kindly drop a comment in the chat box. Let me know that you understood that. Drop a comment, drop an emoji, drop whatever it is. Just let me know that you got that. I'm waiting to see our opinions in the chat box. If you understood that illustration, let me know in the chat box right about now. Okay, beautiful, beautiful, beautiful. Good, thank you. So, when you understand this, it will be easier for you to relate with the market from natural perspectives, all right? You won't just relate with it based on the number. You'll be able to reason along with the market and understand, oh, all right, this is what's happening, this is what's happening, all right? So the same way at that point where you jumped over the fence or you jumped over that wall, all right? The same way you needed adrenaline and all of the muscles in your body to work in order to get you over that wall, it's the same way there is something that applies in the financial market. All right, it's called momentum. All right, momentum causes breakouts. All right, and that's why after most breakouts, there's always something called a retest. But I'm not going to go in depth about that. I'm just going to stop there. All right, for those of you who are already trading and are already familiar with the concept of breakout, if you understood this analogy or this illustration that I just gave, it will become so much easier for you to trade breakouts. All right, it will become so much easier for you to trade breakouts. All right, so let's go back to Fibonacci. So the Fibonacci levels tell us that based on, for example, if I were a doctor, all right, based on me watching how fast this person had to run, all right, watching how fast you had to run in order for you to be able to get over that fence, all right, in order for you to be able to jump over that fence, all right. If I were a doctor or someone who was involved in healthcare, I would naturally be able to predict that based on how this guy exerted energy, he is most likely going to sleep for hours the following day. All right. He's most likely going to need a very long rest to recover. All right. That's the same way Fibonacci begins to tell us. So Fibonacci gives us an insight or an idea, all right, or a picture or a perspective of where to expect or of how long to expect the rest that the market is taking. It shows us how long we should expect that rest to happen for. All right. So Fibonacci levels begin to tell us, all right, based on this impulse that the market has made, all right, based on how fast the market has had to move to generate this impulse. All right. Based on how fast market has had to move to generate that impulse. This is most likely how long the market is going to need to rest for. All right. And that's what tells us, that's what gives birth to our retracement levels. All right. Then there is another level. All right. There's another Fibonacci tool. It's called the Fibonacci expansion tool. All right. It's called the Fibonacci expansion tool. Let me quickly get this out of the way. Good. So for those of you who are just joining us, we're still talking about Fibonacci principles in Forex. And then we've been looking into Fibonacci retracement tool. All right, this is the second session, and this is the Fibonacci retracement tool. If peradventure you're watching this on the YouTube channel, please, if you're watching this from YouTube, kindly subscribe and like the video. It's we're looking forward to dropping some more amazing content from time to time. We look forward to lavishing our YouTube subscribers with amazing content, completely free of charge. So if you're watching this by YouTube right now, kindly click on the subscription button, click on the subscribe button, and click on the notification icon so that you can be notified whenever we drop new content. All right, so that said, this is the trend that we're looking at, all right? This trend as drawn by these arrowed lines, all right? And we've considered the fact that these regions that I marked with the red rectangles are actually retracement moves that occurred, bearish retracement moves that occurred in an overall bullish market. All right, so now we're going to test the Fibonacci expansion tool to see just how accurate it is. So we've looked at the fact that the Fibonacci retracement tool tells you that based on the impulse, based on how fast this guy ran in order to be able to jump over this fence, all right, this guy is going to need to rest for so duration in order to be able to fully recover. All right, if you've been to hospitals before, you hear doctors say things like, oh, this person is going to need 1 week bed rest in order for them to fully recover. This person is going to need 3 days bed rest in order to fully recover. All right, so that's how Fibonacci retracement tools also notify us. All right, it tells us, oh, this commodity is going to need, this commodity is going to start retracing from a certain point, you understand? So that's how the Fibonacci retracement level works. All right. So having said that, right now we're going to check the Fibonacci expansion tool. The Fibonacci expansion tool simply gives us an idea or gives us an insight into when the next break is going to happen. All right, when the next rest or retracement is going to happen. Remember, Fibonacci retracement tool tells us when the rest is supposed to end. All right, Fibonacci expansion tool tells us when another rest would begin, based on the pattern of its previous impulse and rest. All right, so I'm going to just apply a Fibonacci expansion tool to this chart right now. And then the first point, we're going to measure the first trend from the low to the high. All right, and then we drag down to the level of the new low. All right, which is around this point. All right. I believe that we can all see that. If you can see that, please let me know in the chat box that you could see that. You can see that. If you can see the Fibonacci level I just drew, please let me know. The Fibonacci expansion tool. You see FE 61.8, FE 100, FE 161.8. Can you see the Fibonacci expansion? I drew it from this low, all right, this high, and then this low, all right? And what it is telling me is, it's giving me an insight into when the next rest or when the next retracement is going to begin, all right? So it's, from this chart, it's telling me when the market gets to 61.8, it's most likely going to start another retracement, or when it gets to 100, or when it gets to 161.8. All right. So, Mr. Silas, is that clear now? Please, if you can see the Fibonacci expansion tool, please let me know that you can see it. All right. Who else can see the Fibonacci expansion? If you can see it, kindly drop a comment or an emoji in the chat box. Let me know you can see it. All right, beautiful. So from this point now, we see that when the arrows I'm trying to draw, let me make this easier for us to see, because I'm not using the background chart. So let me just okay. I'm trying to remove the background chart so that it becomes easier for us to see what it is that we're looking at. Okay, beautiful. So these lines that I drew, that's actually what we are following. Okay, these lines I drew, that's what we are following, not anything else. Let me even remove the grid so that I believe we can see clearer now. All right, so we've had this impulse, we have had this retracement. All right, so what the Fibonacci expansion tool will do is that based on this impulse and retracement, it's going to give us an insight and an outlook or a projection of when next the market is most likely going to have this kind of impulse and retracement again. All right, so you see that when market got to 61.8, as represented by these arrowed lines, when it got to 61.8, it didn't react to 61.8, all right? However, when it got to level 100, all right, it just crossed the line a little bit and then came back for a rest, okay? Came back to rest. And then after this rest, this retracement, we have it bouncing all the way back up, all right? We have it bouncing all the way back up. However, if you are a subscriber or if you are a student at EzFx Academy, if you're one of my students, you would know that we really use the Fibonacci expansion tool. And the reason is not because the Fibonacci expansion tool is not effective. It's simply because over time, after years of research, I've been able to combine both the Fibonacci retracement and Fibonacci expansion tools into one comprehensive tool, all right, into one comprehensive tool. And that's why, remember when I started, I was showing you that I used my own custom-made Fibonacci tool, all right? It's my own custom-made Fibonacci tool, which is why you don't see figures on it, right? Which is why you don't see figures on it. You see labels, invalid, sniper, E1, MP, and then origin, right? Those are custom levels that I defined from experience. So having said that, let's go back to Fibonacci. All right, let's go back to Fibonacci. I'm going to be sharing, we're going to be going back to the whiteboard so that I can do some further breakdown. All right, so we are still discussing Fibonacci principles and Forex. All right, and then in the first session, we discussed about the Fibonacci sequence, and then I was showing us how it also applies to anything that involves numbers. All right, and I also explained to us that Forex is a numbers game because all we deal with is price. All right, and price is represented in figures. All right, and that's why I was showing you last week that a successful Forex trader is not known by how much money he's making from the market per se. He's known by how many pips, all right, by how many market figures is able to capture. All right, so having said that, we discussed how that the Fibonacci sequence comprises of numbers like 0, 1, 1, 2, 3, 5, 8, 13, 21, 34, 55, and then 89, and so on and so forth. All right. So, and then I showed us that, I showed us also that the reason why is because the Fibonacci sequence is powerful because it encompasses all the different categories of numbers. All right. In it, we have prime numbers. All right. In it, we have even numbers. And in it, we have odd numbers. All right. And as a result of that, it makes it perfect for defining anything that has to do with numbers. All right. Having said that, one thing I'm yet to show you, however, is how this applies to the Fibonacci retracement tool. All right. So what I'm just going to say at this point is that there is a level called the golden Fibonacci ratio. All right, and that's called the level 61.8. All right, it's called 61.8 because in order for the Fibonacci retracement tools on MetaTrader to work, all right, the figure needed to be converted into into percentages, all right, into percentages of market movement. Okay, so I'm also going to show you, because this 61.8 is what some would represent as 0.618. All right, so whether it's 61.8 that you're seeing or 0.618, neither of them is wrong. And the reason why the Fib level 61.8 is called the golden ratio is because, let's take, for example, two random figures in this sequence, which are figures 5 and 8. All right, remember, I just picked them selectively at random. All right, so let's do 5 times, let's do 5 times 0.618. All right, let's calculate that and see what figure we would have at the end of that calculation. Sorry, 5 divided by 0.618 rather. divided by 0.618. You'll discover that the answer we get, according to my calculator, is 8.09061. All right, 0614. Okay, which means that if I divide a number by this Fibonacci ratio, all right, I would get the next number. All right, which means if I multiply this by 0.618, I'm going to get the previous number. I'm going to get the previous number, which is 3.09. All right. So if you understood that, please let me know in the chat box quickly before I proceed, because we're about to start getting into some technical aspects of Fibonacci. All right, beautiful. So which also means that if I multiply 8, this 8.090614, if I multiplied it, or say, for example, if I multiplied 8 by 0.618, I'm going to get 4.9944, which is approximately 5. Are the figures, is it adding up in our minds now? Is it adding up? Please let me know in the chat box if it's adding up. All right, beautiful. Beautiful. Thank you. So, Mr. Jake, are you still here? Okay, he's not here. Oh, okay, good, good. So, when you understand this, that's why most traders use level 61.8 on their Fibonacci retracement tool. All right. Most traders use 61.8 on their Fibonacci retracement tool. Okay. However, because remember I told you that it had to be, this is a percentage. All right. This is a percentage. So some other levels that are used on the Fibonacci retracement tool include 23.6. Some people use 38.2. Some people use level 50. Some people use 61.8. Some people will find 78.6 on Trading View. That's part of the default levels. Then there's 100, and then there's level 0. All right. So now I've heard a lot of people argue back and forth. On which level is the strongest or which level is the most important. All right, which level is the strongest or which level is the most important. All right. I'm going to answer briefly, but I would try my best not to give out too much information. So I have 3 shapes or 3 writings on my screen. All right. The first one is a W. The second one looks like a W, but is not a W. All right. And then the third one looks like a knife with a broken tip. All right. What we want to look at is this leg, this leg, this leg. which of the three is going to give us the maximum momentum? All right, which of the three is going to give birth to the strongest momentum? I'm not going to answer that question, but I'm going to give you a question that should help you answer that question. Imagine that the market or price was a catapult. All right, imagine it was a catapult. And then you are supposed to launch a stone from this catapult. All right. One of the most basic things you will know about the catapult is the farther you desire that the stone travels. All right, the more you pull back, and that's also confirmed by the laws of momentum, the law of inertia. All right, where Ft is equal to I. You understand? If you're not a physics student, you may not understand what I just explained, but I'm sure that those who are physics savvy or who love mathematics should be able to understand that. So the more the potential energy that is gathered inside or within this string, the more the energy that will be convertible into mechanical energy in the stone when it is launched. All right. So understanding that will help you to know, all right, which of these is supposed to be the strongest level. All right. Is 100 the strongest level? Is 78.6? Is it 61.8? Is it 50? Is it 38.2? Is it 23.6? I leave you to answer that. However, remember that the golden ratio is 61.8. All right, the golden ratio is 61.8. So if somebody wants to ask me, okay, so if 61.8 is the golden ratio, then how did they come up with all of these other numbers? All right, how did they come up with all of these other numbers? The answer is simple. The answer is pretty simple, like I said. So what we're looking at now, remember we said if you divide 8 by 0.618, all right, it will give you the previous number, which is 5. All right, if you multiply 8 rather to 0.618, it will give you the previous number, which is 5. All right. However, what am I going to multiply 5 by to get 2? All right. So what am I going to multiply 5 by to get 2? You discover that that's going to be 0.4. All right, 0.4. If you convert that to percentages, you have 40%. All right, you have 40%, which is equivalent to what we have here, 38.2. Because if you round it up, you're going to have 38.2. However, that's not the only reason why we have 38.2 here. All right. Remember the full sequence, the full figure for a percentage is 100. All right. So if you calculate 100 minus 61.8, you have 38.2. All right. From doing 100 minus 61.8. All right. Secondly, if you do 100 minus, now that you have 38.2, you have 61.8. All right. If you do 61.8 minus 38.2, if you do 61.8 minus 38.2, you have 23.6. All right. You have 23.6. And then from this 23.6 now, all right, from this 23.6 now, I know somebody is wondering, how then did they get 78.6? The answer is simple. The answer is simple. is simply 100. Although 78.6 is not a value that I reckon with. However, one of the values that I consider to be the strongest is when you calculate 100 minus 23.6. All right, it will give you 76.4. All right, so that's that about that. I don't want to go into too much detail because I need to reserve some information for my premium subscribers. So apologies for anyone who might be offended by that, but I believe that I have dished out sufficient information already for you to be able to take up your own research and learn some more amazing things about Fibonacci. All right. So if you've learned something so far, I want to see in the chat box that you've learned something so far and you understood what I've explained. Please do that quickly. Let me know in the chat box that you understood. Beautiful. Does anybody have any other, okay? Is there anybody with a question? Does anybody have a question that they would like to ask? Does anybody have a question? Does anybody have a question? I'm waiting, I'm waiting, I'm waiting. If you do not have a question, just type in the chat box, no questions, no questions, no questions. Okay, I take that to be a no. So it looks like nobody asks questions right now. All right, nobody asks questions right now. Okay, so all right, so what we're gonna do right now is that we're gonna go on another very short break. We're gonna go on another very short break by 12:50, which is 10 minutes to 1 by my time, by Nigerian time. All right, 10 minutes to 1. I'm gonna be coming back online. We're gonna be coming back online to continue this session. We're gonna take the third session where I'm gonna be showing you practical applications of this thing. All right, I'm gonna be showing you chart examples. I'm gonna go into the chart and show you live examples of price action as it has worked for us. All right, I'm going to be showing you that live. All right, so please, please, and please, if you have friends, you have people who need this information, let them know that